Hold on one moment. All right, y'all. So welcome to today's session. I'm going to go over a couple of things with you guys. And hopefully, if you have questions and concerns, just reach out. You can ask questions here. You can put it in the chat. You can do that. You can raise your hand. You can stop me and say, hey, what does that mean? And that's fine as well. Okay, so hold on. So I'm going to share my screen now. All right, and let's get started. Okay, let's do a quick share. Okay, can you guys see my screen? You're all on mute. If somebody can come off mute.
Yes, I can see it.
Perfect. Thank you so much.
Yeah,
okay, so this is the chart. Everybody knows this is a chart. But what I want to go over is just drilling, helping you drill this into your mind that you always want to trade with the trend. Okay, trade with the trend, because that's really important. You first have to, number one, identify the trend. Is it going to be an uptrend, or is it going to be a downtrend? So over here, this is considered what? Can anybody tell me what this is considered?
Uptrend.
Very good. Now we'll be quizzing you guys so that you truly understand how this works. Because I know about it. I need to know that you guys know about it. So this is considered an uptrend. Who can answer this one right here?
Nice downtrend.
Downtrend. Very good. Very good. Okay, and then over here, what is this?
I think this consolation is very bad.
Very good. It's going sideways. It's called a consolidation. You do not want to trade consolidations. Stay away from this because you will be trapped. This is one way the market makers make their money. They try to fake you out thinking it's going to go up, and then it goes down, goes up, goes down, goes up, goes down. Therefore, if you're in the trade thinking it's going to go up, you get trapped, okay? Because it never makes a higher high, and it never makes a lower low. Just try to stay away from consolidations. So I'm going to go ahead and delete it from your mind, because you don't want to trade that. We'll go look at some consolidations on the chart. Okay, so what we want to do is just trade in an uptrend, okay, where we see highs, low, higher high, lower high, higher high, lower high, higher high. So basically this high, okay, if I take my tool, this high right here is higher than this high. Okay, that's called a higher high. This high right here, excuse me, is higher than this high. So that's a higher high. And then this high is higher than this high. Okay. But when you're entering the trade, right, rule of thumb is always to buy low. This is a low right here. Buy low, sell high, right? So if you got into the trade down here, you want to try to ride the wave, the trend, to the point where it gets to a higher level. Okay. So that's another key concept to remember, is to buy low, sell high. Okay. Now, if you miss this right here, this uptrend right here, and this little uptick, you wait for a consolidation, you wait for it to pull back, okay, right here, and you get in on this low, okay, to ride it all the way back up, okay. If you miss this one right here, you wait for this one to develop. If you miss this one, you wait for this one to develop, okay. So always buy on the dip. Put that on your notes. Always buy on the dip. So you could have gotten this trade 3 times, or maybe 4 times. If you saw it down here, you got on here, you got on here, you got on here, and you got on here. So that's 1, 2, 3, 4 times. And you sell here, okay, depending on your lot size, okay. Well, I put a green line here to show you that the pullbacks normally right? This is considered a pullback, right? This area right here is considered a retracement, considered a pullback. You'll normally find that the pullbacks on an uptrend would land on this line right at this high right here. Okay, so typically it would touch this high. If you put a line, which I did, like the green line, it'll typically touch the green line, which is considered support, and climb up to make a new level of support. Okay, because this is support, this is resistance. But as soon as it passes resistance, it now turns into support. So what happens is when it passes resistance and turns into support, it typically wants to go higher than this high right here, pull back and hit that support, okay, and bounce off. But you got to pay attention to it, because if it goes below this green line or below this green line, okay, it now broke the support, okay, it broke a support. So what you want to do is you want to make sure either it comes back to this green line and bounces off. If it doesn't bounce off the green line, right, it could be a reversal, meaning now it's going to change its trend and now go down and do this right here. So if it starts to do this off the high, where it pulls back, hits the green line, it'll bounce off this green line, because now this is what support, and now this is considered resistance. It bounces off resistance, breaks through support, creates a new resistance line, now it's called resistance, and comes back up. This is called a pullback. All right, pullback or retracement, hits the green line and continues journey downward. And these are the two trends that you want to trade in, okay? Because they will give you multiple points, 0.1, well, actually 0.1, 0.2, 0.3, to catch the trade, okay? You don't want to get in the trade in the middle right here. You don't want to get in the trade in the middle right here. You don't want to get in the trade in the middle right here. You don't want to get in the trade. You don't want to get in the trade. You want to get in the trade where your support and resistance levels are. So when you plot out your chart, the first thing you want to do is draw your support and resistance levels. Okay, so if we look at a live chart, okay, this is GBP USD. If we look at a live chart, what we want to do, this is the 4-hour chart, okay, because I normally do a top-down analysis. I start with the daily, 4-hour, 1 hour, okay, because I want to get in the trade during the 15-minute, okay. If you are a scalper, you want to look at the 15-minute, okay, the 5-minute, enter on the 1-minute, okay, but it all depends how the type of trader you are. So you got to determine, are you a patient trader? If you're patient and you can wait an hour for your trade to develop, then you are considered an intraday trader or a day trader. If you're not patient and you want a quick profit, you're considered a scalper. Okay, so you have to determine what kind of trader you are. Are you patient enough to wait an hour? Are you patient enough to wait 4 hours? Because every candle on the 4-hour, this is the 4-hour, it will take 4 hours, okay, for this one candle right here to develop. Okay, 4 hours for this one candle to develop. 4 hours for this next candle to develop. Okay, but if you scale down to the 1 hour, now it only takes 1 hour for each one of these candles to develop. Okay, so 1 hour, 1 hour, 1 hour, 1 hour. How many hours in a day? 24 hours in a day. All right. Now,
Yep.
remember I mentioned to you guys, read the Candlestick Bible. That book is going to tell you a lot about the different candles and things of that nature. Okay. Now, looking at this, right, what I said before, if you start at the 4-hour, you want to go ahead and put your support and resistance levels. Now, what do I mean by that? Okay. You want to put a line, okay, at key levels of support. Create those support resistance levels. Okay, so I'm going to delete this. Okay, and we're going to look at the total chart. We're going to take our horizontal line, array, well, actually, the horizontal line. We're going to put our resistance all the way up here. We're going to put our support all the way down here. All right, but we're going to find where the middle is, right? Like where in the middle does these candles bounce off of? And you're going to create lines where you see multiple touches, right? So you're going to take this horizontal line again. You're going to put one here because you can see 1, 2, 3, 4, 5, 6, like 6 touches there. You're going to take another line. You're going to see if there's another spot where there's more touches. So there's a lot of touches here. Okay, so you're plotting out. These are called your ranges. All right. Because what you want to do when you create these lines is always look left. Okay. Because when you start looking left, you'll notice that when the candles get to these different lines, what happens? It'll either break through it, touch it, bounce off of it, touch it, bounce off of it. So historical data can tell you that, okay, if it broke through, came down and touched this line, good chance it'll bounce off and go higher. Okay. Is that 100% foolproof? Not necessarily, because as you can see, it broke through here and came down to this line down here. But historical data is, if we look at this line and we go left, go left, go left, what do we see? We see that once it broke here, it bounced off and went higher right here. Didn't necessarily come down to touch the line. Okay, so you can actually say to yourself, okay, it didn't touch the line, but over here it did. Okay, so we're gonna look left to see when did it touch that line and bounce off of it? Actually never did, right? If you look left, it broke through the line and made a lower low. But if we look left, we notice that there's some lows down here. So we want to create another horizontal line. We'll put a line here to see where all these candlesticks are touching. All right. And then we want to put another line below this one. Okay. Because now we know that if it comes down to this particular line, it's a good opportunity where it might come down and bounce off the line and go higher. Okay. And that's how you do your analysis, by looking left. All right. So there's a good opportunity here. If I take this patch line, that according to historical data, it'll probably bounce off this line, right, and go higher. Now, it may bypass this line, hit this line, go higher. Okay, that's one option. Okay.
Okay, sorry for interrupting you. How did you put up the lines? Like, how do I want to put the lines, or where to put the lines? After what count?
Okay.
Sorry for
You're talking
bringing
about
it
the
back.
support and resistance lines, these lines?
Yes, support and
Okay.
resistance line.
Okay. The way you do that is to look left, right?
Left. Okay.
Look left and see where all the lines are touched, well, all the candles are touching. Okay, you see this, if I put a box here, you see right here, this is a consolidation, right?
Yeah, sure.
Because it's staying within this range. So if this is a consolidation, you want to put a line underneath the consolidation.
Okay.
Okay, Where there's multiple touches, there's a line. That's what you got to remember.
Okay, okay.
Multiple touches, because those are considered ranges. Okay.
Okay.
All right. Now you have to do that.
Thanks.
Typically, this is the 4 hours. So you also have to do it on the 1 hour. Okay. If you do it on the 1 hour, you'll notice that there's multiple touches on the 1 hour as well. Okay.
Okay.
Let me delete this. So if we do this, you'll notice that, like, okay, it came down, right? And then it came up here. So when there's a high and a low, you put a line there. You see this touched here. Can you see the screen?
Yeah, I can see.
Okay. All right. So you want to make, you see there's different touches here. Touch here, touch there, and touch there. That's where you draw your line. Okay. Or you could bring it down a little bit more because there's more right here. A lot of touches right off this line, right?
Okay, okay.
That's where you want to draw a line through those touches. So if we made it bigger, you notice that it'll either touch the line, bounce off, reverse, touch the line or go above it, bounce off. You see? It touched here, bounced off. Touched here, bounced off. So the buyers and sellers, they're fighting to either make it go higher or lower. But right here, the sellers are winning. They're like, okay, you guys can come up here, but we're going to continue to push it down. Then all of a sudden, the buyer said, no, 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 no. We're going to continue to buy, supply and demand. We're going to continue to buy above the line, okay? Come back down and push it higher. So you could put another line whenever there's a high. You can always put a line on the top, okay? Because you can see on the left side, it touched that line, you see? Okay, so whenever there's a high, you can put a line at the high and then look left, because when it gets to the high point, it can't go no more, right? Okay, but if you look left, you'll notice that, okay, why didn't it go higher? Because here, right, it pushed, it was high here, then it pushed down, went below the line, okay, continue to push down, then it started to push up, but it's not breaking this line and starting to push back down. You see what I'm saying?
Yeah, okay, yeah.
Okay. So your support resistance lines will tell you, if you're in an uptrend. Remember, I said always determine first what trend you're in. So let's go back to the 4 hour. And what trend are we in? We're
From the look of things,
in a downtrend.
Downtrend, yeah.
Right?
Yep.
Downtrend. So you're looking for sell orders, not buy orders, because everything is trading below these lines, right? Okay. So you don't want to put a buy in to go higher. You want to put a sell in to go lower. Does that make sense?
Yeah.
Okay. Okay. All right. So now we're going to continue to go. Now that we know that we're in a downtrend, we're looking for trades to go lower. Okay. But we actually add this support line right here, because I also put another line here. So we have to anticipate, okay, if we're at this line, what are the candles are telling us at that particular line? Okay.
Yeah, yep.
Right. Okay, because right here, this candle is a doji. Okay, put that on your notes. When you see a cross, it's a doji.
It's a doji, okay.
Okay, but then you see this.
Hammer. So,
It's an upside down hammer. It's an
Yep.
upside down hammer, but it's also considered a shooting star because it's shooting lower.
Okay.
Okay. Okay. So you have a reversal here. This is a doji, which is a reversal. So it was starting to go up here, and then it said, you know what? I'm gonna put this doji right here. A doji means reversal, opposite direction.
Mm.
So that's why it started to go
Okay.
down. Okay.
Okay. Okay. Okay.
Okay. But it bounced off the line, right? And then it
Yeah.
developed this particular candle, which is another indication that's going to push lower. So
Okay.
we have to wait to see if it's going to go lower, right?
Yeah.
So you take your path and you try to, you know, if it goes below this line, what we have to wait
It's going
for
down.
is for it to
Okay.
hit
To
this
be
line.
confirmed. Okay.
It's got to come back and hit the line to go lower. This is a very important thing right here. If it comes back and hits the line, it'll go lower. Okay, so that's why you have to be patient enough to do this. You don't put an order in over here. You put an order in when it comes back and touches the line.
Okay.
Okay, because now it's got to come down to the next level, which is right here. According to the, if you look
The
left,
next support. This next support level. Okay.
right, the next support level, correct. Okay, so you would put a sell order in here, and you're gonna put a stop loss above the line and a take profit at the
Okay.
next level of support.
Wow.
And then you set it and forget it.
Okay. This is a
Okay.
trap.
Yeah.
Yeah.
Yeah. Because if it comes back and touches the green line
You said
and it hits this line right here, then it was a bad trade.
stop loss. Stop loss.
Right.
Yeah.
Right. But you protect your principal. You didn't blow your account because now you have something that'll stop it from,
Mm,
taking all your money.
mm,
But if it goes
mm.
down and hits this line, you're in profit. So what happens is as it continues to come down, it's not going to go straight down. It's going to go up, down, up, down, up, down, up, down.
Yeah, 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 yeah. I think
And what you want,
that's the movement.
what you want to do is move
Very
your
deceptive.
line, your stop loss, and place it lower because now you're in profit because you
Okay.
got in over here. You move your stop loss, you're in profit. You move it again, you're in profit. So if it comes back and touches that green line, you don't
You
care
make a profit.
because you made some
Yeah,
money.
yeah.
You made some money. You
Amazing.
made some money. So you do a trailing stop loss, until it hits support again. Okay. Now, if it hits
Mm.
the green line, you don't care because you made money. You didn't lose money.
Yeah,
You made money. Does that make sense?
yeah. Yeah, well, yeah, yeah.
Okay. Okay. So that's how you create your support and resistance lines. Okay. Now I'm going to clear everything. This is going to end in 10 minutes, but I'm going to send the link back to you guys in the chat so that you can reconnect for the next 30 minutes because the Zoom was only 30 minutes long. So as soon as it disconnects, I'll send you guys another link to click on. Okay. Now your entries are always going to be on the 15-minute. Okay.
And how many hours?
In the 15-minute, you're going to enter your trade.
15 minutes.
Okay. Because this is where it's going to tell you now, if you we already determined it's a downtrend, right?
Yeah.
Now we're going to
This
find
is
entries. Entries on the
this
15
15
minute.
minutes?
Yeah.
15 minutes?
Yeah. Every candle is
Wow.
15 minutes long.
Every candle 15 minutes. Okay, now I think I got
Right.
that now.
Right. So it
Yep.
takes 4 candles to make an hour. Does that make sense?
Yeah.
4 candles to make an hour. Okay. Now, we know already that we're in a downtrend according to the 4-hour, right? So we want to put sells in. Whenever it pulls back towards the line, we want to sell. Okay. We want to find entries on the pullback. If it goes above this line here, we don't take a sell. Okay. But if it stays below the line, we try to look for an entry.
Which is a low what's it called? Shorting.
Yes. We're looking to short it to go lower. That is correct. So we're looking for entries. So again, okay, we're going to put support and resistance levels to see where is support, where is resistance. Okay, so we're going to take our horizontal ray. We're going to lock it up. We know the top is resistance. Where are the multiple touches? Okay, here is one. All right, let's see. Here is another one. See the multiple touches? I'll clean it up in a moment.
Yeah.
Here's another multiple touch right here. Okay. There's another one here. I couldn't go below here, so there's a lot of touches there. And we put a support down here. And there's one over here. Okay, so we're looking for these levels to be touched, bounced off, touched, bounced off to go lower. Does that make sense?
Mm.
Okay, so let's clean this up a little bit. Okay, so we have a touch here. And you do it on the wicks. Whenever you do it on top of the wicks. It's not how I like to do it. Right on top of the wicks. Although you do it on the bottom of the wicks. Those are considered multiple touches. Over here. Okay. So now we're just looking for we know this is your this is your trend line. So when it pulls back and goes towards the trend line, we want to look for sells. Sell, 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 sell. Okay. The sell comes down, pulls back, almost touches the trend, right?
Yep.
Right. But look at the candle. This candle right here. Do you know what that candle's called?
No.
This candle is called a gravestone.
The
Okay.
gravestone.
Gravestone. When you see this candle, excuse me, it's a reversal. Okay.
Okay.
As you can see, boom, this huge, huge bearish engulfing candle came right after the gravestone. Okay. It opened, tried to make a lower high, but then it came all the way down. And then you have a shooting star going down. See, all these candles are down candles.
Gravestone. A shooting star. Okay.
Okay. And you would have took your trade on this particular candle to ride it all the way down. You see that?
Yeah.
You see that? Because every time it pulled back, it didn't go above your trend line. It's below the trend line.
Yeah.
Right? Because we know it's a downtrend. So all of this is considered trading with the trend going down. Okay. Okay. All right. So those are, so that's what I wanted to share with you on this segment. So did you guys get a lot of value out of that?
Yeah.
A whole lot.
Hey.
Awesome. All right. So I'm just waiting for the Zoom to end because I'm going to show you guys another chart. That's going to help you guys as well. You could use both charts at the same time. So I'll show you what it looks like before we get disconnected from Zoom here. So if you go to, right now we're in candlestick